Today we are talking about debt elimination. Credit card debt is at an all-time high in America, reaching almost 1 trillion in 2023, and we're only in the month of February. This is another episode of Becoming with Angelina Watkins, and I'm your host, Angelina, your queen of becoming, here to help you become who you need to be so that you can do what you're purposed to do, so you can live the abundant life that God wants you to live. And I started this podcast because I wanted to help my corporate professionals and startup entrepreneurs achieve emotional, spiritual, and financial prosperity while they're building their business so that they can leave their 9-to-5 with confidence. Okay, so I am here to help you become who you need to be so that you can flourish in all areas of your life. Now, if this is your first time joining us, I welcome you. Thank you so much for joining the show. I hope you enjoy it, which I'm pretty sure that you will enjoy it. Don't forget to subscribe and hit that notification bell because I don't want you to miss another episode of Becoming with Angelina Watkins. Now, we're going to get right into it today. I'm not going to waste any time. Today, we are talking about debt elimination. Credit card debt is at an all-time high in America, reaching almost 1 trillion in 2023, and we're only in the month of February.
Debt crisis in our country, Americans owe a record amount on their credit cards as inflation makes it hard for many to pay off their balances. Chief Economics Correspondent Rebecca Jarvis has the story. Good morning, Rebecca.
Hi, George. Good morning. And we've seen this explosion in debt overall. Credit card balances especially have hit a new record at the end of last year, nearly $1 trillion. That's not only the highest ever, according to the Federal Reserve Bank of New York, it was also the biggest yearly increase on record, up $130 billion. So what is driving this jump? Well, it shouldn't be a big surprise to anyone out there. Inflation and rising interest rates are the two big culprits. You pay more at the grocery store, your credit card bills go up, and then at the same time, the Fed is hiking interest rates to eventually push prices lower. But in the meantime, you owe more on your credit card bill.
So credit card debt is going up, and the culprits are inflation and interest rates. So let's just talk about that for a minute. We're going to get into some ways to eliminate your debt and bring down your credit card debt. But let's just talk about what is causing our credit card debt to rise the way it is. Inflation. We are all seeing it. We are all feeling it at the pump. We're feeling it when we go to the grocery store to buy groceries. We're feeling it when we go to Walmart and Target to get our essentials, and we're buying the paper towels and the tissues and the toothpaste and deodorant. The rising prices of the goods and services that we buy are going up, and which means that the value of our dollar is not what it used to be 2 years ago, 5 years ago. And so now what we used to be able to pay for, we can't pay for it anymore. Like they say, they don't even call Dollar Tree a Dollar Tree anymore. Everyone keeps calling it the $1.25 store. That lets you know how much inflation has gone up. You can't even go to the dollar store anymore and get stuff for $1. So with that, you have the Fed's rising interest rates. And with the rising of the interest rates, we can't afford the things that we used to be able to afford. The homes that we were able to buy 2 years ago for maybe $500,000, now with rising interest rates, that causes you to be able only to maybe afford a home that's $300,000. And I'm just making those numbers up. Okay. And so what happens is inflation and interest rates usually go in the same direction. They usually go hand in hand. Why is that so? Because with inflation rising, a lot of times the feds will rise the interest rates. And the purpose of rising the interest rates is to encourage consumers, buyers, to spend less and save more. They want you to take your money out of the market and start saving your money, because then that means demand for things are low. If we're not buying as much, then the demand is low. And with the demand being low and the supply high, well, then the prices will have to come down. And that's why you'll see interest rates rising when inflation rises, because the feds are rising the interest rates in hopes that it would encourage you to spend less. But the problem is with inflation, We don't have the purchasing power that we used to have, which means that we don't have enough money left over to pay our credit card debt. I mean, by all means, when you go to the grocery store right now, a lot of people in different areas of the country are spending $7 to $8 just to buy eggs. And so our grocery bill that used to be $100 is now $200, which leaves you less money to put towards paying down your credit card debt. And so what can you do? What can you do to start eliminating your credit card debt when your purchasing power is causing you not to be able to have enough money left over to even pay down the debt? So I'm going to give you five things that you can do to try to eliminate your credit card debt when we're in an economy like we are today, where the prices are rising, interest rates are rising, and we just can't afford to pay our bills. Okay. The first thing that you can do is consolidate. Try to consolidate your bills into one loan with a lower interest rate. And therefore that gives you the ability to lower how much you're paying out. You know, if you're paying 10 different bills costing you $1,000 a month, then possibly if you were to consolidate all of those bills and get a lower interest rate, you can go from maybe $1,000 a month to only paying $400 a month. And so you want to be able to consolidating your bills will help you lower your costs and be able to pay your bills. A second one is to request lower interest rates on your credit cards. And you can do that. And I don't know if a lot of people know that, but you can call up the credit card company. And if you have been paying on time and you've been a good paying customer, then they will lower your interest rate. And so then, of course, then that allows that your payment to go more towards principal than it is for interest. Another thing that you consider is downsize. What if you can't afford what you have right now? It's okay to downsize. Go to a smaller living arrangement. Get a less expensive car. I've done that in the last recession back in 2008. That really impacted me. I lost my business. I lost my investments. I lost my job. And so what can I do? I got a job that wasn't paying as much as I was making. So I downsized. I went from living in a home to living into a 2-bedroom apartment. I went from an expensive car to a less expensive car until I was able to get out of the debt that I was in, get myself back on my feet, and then start all over again. So it's okay to downsize. I know a lot of times some people are a little bit embarrassed about downsizing, but what's worse? Do you downsizing or being embarrassed because you're in debt and you ain't got no money to pay for anything? Don't worry about what other people think. The fourth thing I want to say is adjust your lifestyle. I know that's hard for many, but sometimes you might have to just adjust your lifestyle. You might have to just pass on those red bottoms and take that $1,000 and put it towards your credit card debt. You might have to spend less on some clothes. I know there's some people who are spending and buying at Amazon. They've constantly got boxes coming to their door. You might have to change your spending habits and start controlling your spending, okay, in order to be able to pay down the credit card debt. And then my last thing, my fifth way of eliminating debt, get a side gig. You know, get a part-time job, get a side gig with maybe like Uber or Instacart. I know a lot of people who do those, and they make up to you can make up to $1,000 a day, depending on, of course, where you are and the demand and if it's a busy night or not. But you can also get a side gig if you're working. You can also get a side gig by writing a book and selling your book, or creating an online course, a coaching program. There's all kind of ways to make extra money in order to pay off the debt. Okay, so those are 5 different ways that you can try to eliminate your debt in the economy that we're living in today, where inflation is rising, interest rates are rising, and your purchasing power is just not what it used to be, and you don't have as much discretionary income left over to pay down the credit card debt. Now, For more ways on eliminating your debt, check out my new book, Path to Prosperity, 17 Secrets to Building Wealth that you can start today. In there, we go over many more debt elimination strategies that you can use in order to control your spending and reduce your debt. So check out the link in the description for it's on pre-sale. All right, and I'm giving a discount for those who buy it on pre-sale. Now, where you are is not where you have to be. Your past does not define you. You define you. So heal, transform, and pursue you.